Good morning. Starting in a few minutes, guys. We're going to be backtesting live today with Emma and Ryan. We'll be looking in detail in the charts and showing you actual examples. Throw this around. We start in 4 minutes. $1,000 giveaway at the end of the stream to comments of relating to the topic of backtesting. Get your comments ready, your questions ready. We'll be answering them. Stay tuned. All right. Good morning, good afternoon, wherever you guys are from. Again, we are doing Maven Live here. We've got Emma and Ryan here today, and we're doing something interesting for the month of October. We're doing largely interactive content with you guys here. Let's see if I can make myself a little bit bigger there. Awesome. Perfect. Guys, so give us a shout out in the comment section if you're ready to go here. We're going to be looking at how you can actually backtest here today. in the following spaces throughout October, we're going to be getting special guests on. We're going to be doing some live trading, and we're going to even be throwing a surprise special event for Halloween at the very end there. Nice. I can see some readies going on in the YouTube chat there, guys. We are streaming live from Facebook, YouTube, Twitter, and Kick, all of the above. Let's start off with a market breakdown looking at, let me just see here, the different markets here. You guys can join us on maventrading.com if you want to be trading with us and get up to $100,000 of funds that you can trade with. Let's look at the higher time frames because, guys, it is October 1st. I told you what was going to happen, right? This level of significance, let's delete all this jazz off of here, guys. This level of significance that we were looking at that we had to deny on the Bitcoin is 64.5, 64.6, one of those levels around there. We needed to make sure that we gained that in order to be a bull once again, and we are not gaining that. So it is a little bit choppy. It's been choppy since March, right? Bitcoin's not been a position where it's been making new highs. It is continuing to consolidate and actually breaking back within the previous cycle's range, right? We can see that back here, right? All of this previous cycle, we're back within that range. And that's not what we want to see as bulls. We want to see strong bounce and then continuation. It does look to me still like a time that we do not want to be confident in this market. So I'm going to be waiting personally even further. S&P is perfectly fine on the monthly, really strong close there. We've seen the S&P showing great strength where traditional stocks are a little bit stronger than the speculative tech sort of sector. The NASDAQ, again, same sort of idea. We are closing the month actually quite strong. It's not quite as strong as the S&P. The gold, I'm sure gold does what gold does best, and that just goes up, similar to Bitcoin. But Bitcoin has been consolidating for quite some time, guys. And that's the market breakdown here. Today, we're talking about backtesting. So if you guys got your backtesting questions ready, you can post them in the comment section below. Emma's going to be reading those along as we go. But what we want to do right now is just give you an example of how somebody might go along and backtest. So Ryan, I'm going to ask you, Ryan has absolutely no idea what we're doing here yet. And so I want to be completely just on the spot here and create this as we go. A completely new situation that we're going to be able to backtest here. So Ryan, what pair are we going to backtest, first of all?
Let's just do the most fluid. Let's do the Euro US.
Euro USD. Okay. Next question. Let's first of all, let's just do a single time frame so it's easy for people. If you're new to backtesting, this is hopefully going to help you so that you can figure out a strategy that works well for you. Is backtesting really important? Of course, it's really important. Good question. You're going to be able, I'll explain to you right now, actually. You're going to be able to figure out a strategy that is similar to the style in which you like. So we're going to pick a style that's very specific to Ryan right now. And you're going to be able to figure out if that's profitable in theory, okay? So obviously after you're done backtesting, you're going to have to do this in the live markets, and you can try on maventrading.com. We have a simulated trading environment where you can get actual cash to get your payouts if you do perform well. So do your backtesting and then try it out on our platform. Guys, Ryan, how do we want to trade here? Do we want to trade with the trend, or do we want to do a range-based trading? Let's figure out a style that's good for you.
I think let's do what you usually do, which is the opposite of me.
You want to do a trend-based trading style. Okay. So how are we going to define the trend? Let me delete this guy here. It's a little bit cleaner. How are we going to define the trend, first of all? So we need to create some sort of scenario. Do we want to use moving averages? Do we want to use a support and resistance? Do we want to use structure breaks sort of like this? Sorry, I broke that in the wrong spot. There you go. Structure breaks. Do we want to use general thought? How do we want to define the trend here?
I again would say the same. You know, being someone who I have never really back tested, so I'm actually going to be learning as well here.
Right.
So let's just do with your strategy and what you would normally do, because it seems to have worked pretty well for you.
Yeah, you want me to give away my strategy? I don't know if I can do that.
Well, not give it away, but you know, a version of it.
All right, so why don't we just define our trend as the structure breaks, okay? So we're going to define trend, and we're going to have some sort of entry requirements, okay? So we know what direction it's going to go. We're doing trend-based trading, of course, guys. We know where we want to be trading. So let's say this is how we're going to define our trend, first of all. We're going to say whenever we have a candle that closes beyond previous levels, horizontal levels, super simple stuff, right? Okay. So this would be a bullish trend, okay? That's a bullish trend because we've then broken off of this. So it's going to be a very, very simple strategy. When are we going to define the trend to change? Well, it's going to be whenever it breaks the previous level that brought us to the high, right? That's how we're going to define it today, okay? So we're currently in an uptrend on this pair on the monthly, okay? So Ryan, let's give us another sort of question. Is we need to know what is our entry requirements, okay? Do we want to just enter on the retest of the level? Do we want to enter immediately when the candle closes? Do we want to do a mean reversion? What are you thinking?
Retest when the levels get retested.
This is a very, very common strategy. So our current scenario would be, okay, so we want to break the trend. We break a level. We're going to retest that level, and that's going to be our buy, okay? This is the scenario. And guys, you can come up with anything on the spot, and Ryan doesn't even know what we're doing, and he's giving us an example. So this is how easy that you can figure this out. So let's make this even crazier because Emma's not even a trader. So let's get Emma's opinion on here. Emma, where are we going to put our stop loss and our take profit?
Oh, gosh.
So here's a couple options, okay? Do we want to put the stop loss below the candle that broke out? Do we want to put the stop loss below the pivot point that brought us to that high? Or do we want to put it at some other position that you think of?
Yeah, as Black Sun is saying, I'm totally going to blow it now. Let's put it first option, just below
the very impulse move. Okay. Mm-hmm. And do you want to use the wick or the candle body?
Oh gosh, you're asking me questions that
this is what's so fun about this stream.
I know, right? Let's use the wick.
Okay, let's use the wick. Okay, so guys, we've just created a entry, a stop loss, and a trend based off of absolute random thought, right? So Emma, one last question. How far are we going to target? Do you want to do a risk reward ratio or do you want to do a target?
Let's do a risk reward ratio.
Okay. And do you want to do 1, 2, or 3?
Let's do 2.
Okay, 2. Perfect. This is a super, super common strategy that people might go into. Okay, guys, here is our scenario. Let's sum it up. This is our trading strategy that might work, right? We don't know. We're going to look for a break into a trend change, right? And we're only going to be trading with the trend, okay? So here's a question. So we're just going to be going back and forth, I believe, okay? Because if the trend breaks in the other direction, we're just going to be entering in the other direction, I believe. If we wanted to make this more complex, we could be using a higher time frame, for example, to determine the trend. But we're just going to be flip-flopping, I think, on this scenario. I think that's what the guys have told me that they want to do, the guys and gals here, right? And we're just going to be entering on the retest with a stop below the wick of the impulse move that broke that structure, okay? And then we're going to be targeting 2R. Okay, guys, let's give this a scenario and go back to a random point. Ryan, what time frame do you want to use, actually?
Let's do the previous week.
Weekly candles?
Yeah.
Okay, weekly candles, and I'm just going to throw this back here, okay? Random spot, replay. This is how I would personally do it. Now, guys, there's lots of different tools you can use for backtesting, and we're just going to go like that, okay? Random spot, okay, cool. All right, guys, so let's define this. And how we're going to track it is we have another chart right here. Oh, wow. What a beautiful chart. That's very detailed. It really doesn't need to be very complex. So one more question, Emma, do we want to be moving our stops to break even, or do we want to be taking profit, or do we want to be doing half profit at 1R or just full profit at 2R?
As you ask me complicated questions.
Yeah.
I guess taking profit.
Do you want to take profit, just full profit at the 2R, or do you want to take profit along the way is what I'm asking.
What would be your recommendation?
That's a good question. Well, let's make it a little bit more interesting. And let's say if we hit 1R, okay. Sorry, no. Let's say if we hit, let's say if we hit 1R, then we take half off, okay? And then we take the other half at 2R, okay? So that way, what we can do is we can claim our return to R. Let's say if we want the full, if we hit the full 2R, that means we're going to get an average of 1.5R. Does that make sense, guys? Because we've taken 1 off at 1 and we've taken 1 off at 2. Is that correct? Tell me if I'm wrong. And if we've then hit only 1R and then we've broken at break even afterwards, which we're going to move our stop forward, then we've only made 0.5R. So those are our 2 cases, okay, of possibility. And our other case is losing 1R, okay? Those are 3 possibilities of what can happen. So we've defined all of the ways that things can be broken down as we go into our back testing. So what we're going to do is, okay, so if it hits the 2R, that means that we've gotten 1.5R overall, okay? If we've hit 1R, that means we've gotten 0.5R overall. And if we've lost, then we do -1R. And this is how we determine how much profit we're going to make. Now, we're not counting in the commissions because the commissions should be, in theory, relatively low unless you are scalping. So be careful with scalping, guys, because that's going to take, if you're scalping, it's going to take about 0.25R off of each trade. So you should factor in what those are, right? But in this case, we're not going to calculate those, okay? Let's back to the chart. And Emma, if there's any questions that pop up along the way, just shoot them my way.
There are so many questions that are popping up right now, but it's a little hard for me to pick which ones are relevant to what we're currently doing. And a lot of them aren't necessarily specific to what we're currently doing. So either we can pause and take some questions every now and then, or we can try to save a bunch for the end. I'm not.
Okay. If there's anything that pops up right now, because I think this is a good segue, because we're going to start doing, we're going to back test, and we're going to do 10 examples, okay? And then we're going to end, because that's a good number that you can see if the strategy somewhat works. I suggest you guys do 25 until you go into your live testing, okay? So any good questions before we start?
Yeah, I think there's a bunch of different ones. I'll show this one just because it just popped up. So, how critical is modeling trade execution in your back testing? Do you factor in slippage and commissions, or do you just hope for smooth sailing?
Yeah, perfect. So if you are trading on, if you're just intraday trading and you're trading over the course of a couple hours, you shouldn't even care about the commissions too much. The commissions should be quite relatively low if you're trading on, the hourly, 2 hour, 4 hour sort of thing. If you're trading on a swing trade, multiple day trade, you should be adding in swap fees, which is a little bit challenging because those change over time. So it's hard to factor in those. However, if you're trading on the 1 or 5 minute sort of deal, you should be adding a loss of 0.5 off of your profit, okay, or 0.25 off of your profit, not off of your losses. Your losses will always be -1R, but your profits will be deducted by 0.25 if you're scalping because of the commissions and spreads. That's a rough, accurate estimate.
Mm-hmm. I have another one up here, which is, how do you determine if the results of the back test are statistically significant?
Yeah, good question. The more data you have, the better. What you need to do is really make sure, first of all, that you're always going to be following the exact same criteria to enter. And it's a little bit challenging because, if you're using something like a moving average or something that's not an exact number, okay, and it's kind of up to the user interpretation, that is a huge problem. And that's why I don't like using any sort of indicators, really. I only like using the horizontal lines because you can't debate with me what this number is, right? You see the number there, 18973. That's the number. You can't debate it. That's where it closed, right? And we know for sure that we can test it properly that way, right? And if you want to be really, really accurate, I suggest you have 500 data points, but 25 will do for the initial backtesting, and 100 is probably going to be good number.
Which I think kind of answers the question I just pulled up, which is if you run into any gaps or inaccuracy in historical data, I think in that case, you just have to collect more data until it's all looking a lot cleaner.
Yeah. Yeah. There's very rare situations where the market data is wrong to what it currently is, or different from what it currently is, but you should be looking at more roughly recent data probably to be more accurate.
Mm-hmm. And I've gotten this question several times now. What's the recommended time frame for back testing a strategy?
Well, whatever time frame you're going to be trading on.
There you go.
All right. With that, let's enter the trades. Okay, guys. So here's the first trade. Immediately, we're on the uptrend, and where's the freaking thing here? Okay, so let's say that we actually did enter on this trade, right? And we're going to enter on that candle, right? And the candle body close that we're going to be entering is that one there, and we're going to be shooting for the 2R. Okay, so this is how you're going to do it, guys, right? Simple. Every single time we're shooting for the bottom of the candle body that closed, which is this one. Okay, and we're going to be entering off of that level there. Okay, we'll shoot for 2R. Let's see where it goes. All right, and you're just going to go the next candle. Right. And that didn't hit the stop yet. Perfect. Okay, guys. So here's the scenario. We actually did not hit the. So here's the scenario that you would actually track it. So we actually did hit the 2R. So we're going to track, and we're going to go back into here, and we're just going to go 1.5R. Guys, I'm just going to do a few examples here so you can see, and then we're going to take some more questions, because we don't actually need to go through this. This is very, very boring, but you need to do this yourself, okay? So the next scenario where we've actually broken a level is this one once again. So let's go and see if we're actually going to enter a trade, okay? Let's see, okay, and it looks like it entered right there, okay? Again, now imagine this is a strategy that actually works, and everyone just makes a, you know, if this starts printing money, everyone's going to start seeing if this actually makes any money, okay? Everyone's going to go on to maventrading.com and try it immediately. Okay, so let's see. Oh, look at that. And boom, again, 2R immediately right off that. Guys, this is a good strategy so far. Okay, where's the, here we go. We'll go in here. Okay, 1.5R. All right, and we're just going to do a couple more just to see what happens, okay? And next. All right, see if we can close that. All right, so it looks like we're consolidating, and now we will break somewhere probably. Okay, so here is another break. So this is where things get interesting, because this is the only way that we defined the strategy was based off of those simple little breaks there, right? So we did enter another trade right here now, right? And that's the stop. Right, and then we're going to shoot for that 2R, right? And we didn't define anything as if it's already hit that or not, because that level has actually already been hit. So these are things that you might want to factor in when you start backtesting, and you're actually going to see these as you're able to backtest. So this is probably more likely to hit the stop, right? There you go. You hit the stop, and now we have a loss. And I'm just going to do probably another one, because we don't actually need the data here. It's not very important. Okay, so the next trade. Okay, so now we're changing the trend. Okay, so now we want to take shorts. Let's just look. So another thing that you might want to factor in is what happens if you cross over these levels back here, right? We were crossing over a couple levels back there, but we're just doing this again here. So let's do another short, and this will be, we'll do one short now, and you'll be able to track some of this data. Let's say we shorted here, okay? And the stop is off of that candle, right? And 2R is here, okay? Okay, guys, this will be the last trade that we take because this is not the most exciting stuff. And look at that. Okay, so it looks like what happened is we're going to stopped at break even, and we just seen every scenario because we didn't actually hit the 2R, but we did hit the 1R. So we took half off, and then we got stopped at break even. So let's just log that down, and then let's look at the data here. So we got 0.5 now. Okay, so that's what happened. So we have some data now that we've collected. Let's say we have hundreds of data points, and we got an interesting question that popped up here. What are the most common mistakes you see traders backtesting? Well, I think the most common mistake in backtesting is being biased to the strategy working, right? So you're gonna make up scenarios that don't actually exist, right? So I'm gonna maybe say, oh, I might have taken it off here, you know what I mean? But that's not actually the strategy you defined, okay? And the strategy we defined is that we take half off at 1, and then we move it to break even. That's what we defined at the start, okay? So if you want to test something different, then do that, okay? And maybe your next strategy is going to be, I take it off at 1.9, right? Now maybe that's the next strategy, and maybe that works better. But you have to test a set of data, and this is why it's going to take you a very long time to become a profitable trader, or even just find a profitable strategy, okay? So guys, the next thing that you do here, very simple. Pull out that calculator, all right, and you're going to add these up. 1.5 plus 1.5 plus 0.5, all right? And then we're going to minus 1, all right? And you're going to divide that by 4. And this is your average return per trade, okay? So that is a profitable strategy, right? Let's say we wanted to deduct the commission, so 0.6, right? Deduct some commission, and you can be more accurate, and you can say this is what you're going to make on average per trade with this strategy. Okay, so that might actually be a decent strategy. So we might want to be further in on that strategy. And as you come up with some ideas, and maybe you want to take some comments, right? And you want to say, hey, this one, you know, it went to 0.9R, you know what I mean? So maybe that's where you want to comment, or maybe you want to say things like, okay, so this one looked funny some way, maybe, or against trend, right? So maybe that's against the trend, right? And I definitely spelled against wrong, but that's okay. So you want to keep track of all these things, and then you can start to take note, and you can say, hey, which ones don't do me good? Which ones are causing me pain? Which ones are causing me losses? And then start cutting those out, refining that strategy further and further. Guys, we're going to take some questions. It's 10 o'clock now, my time. We'll wrap it up here. Finish off with a few questions. Hopefully this was a useful discussion for you guys.
Yeah, I'm going to pull a couple questions from further back that I wrote down. I tried to scroll up and grab them, but they're way too far back at this point. We're getting a lot of questions through.
Good.
So one of them is just how, like, when back testing, a lot of people seem to be asking about their emotions and stuff. And we talk about psychology and stuff, but is there any way with back testing that they should kind of observe and handle their emotions, and any practices they should do?
Oh, interesting. Yeah. So the great thing about back testing is you're not biased to your decisions at all, right? You don't care what happens, right? You are, I did mention, you are going to be a little bit biased to the strategy in coming up with like, okay, maybe I did close it. No, you want to make sure that you follow the rules, right? Because if you're cheating yourself in the back testing, you're definitely cheating yourself in the live testing, right? So if you can't back test properly without emotion, you're for sure going to have problems in live testing, and you shouldn't even start live testing, honestly. So back testing is a really great scenario for you to be able to figure out data that is a for sure given thing, right?
I've got another one up on the screen, which is how do you avoid blindness, which can result from only back testing one time frame?
Yeah. Yeah, that's a tricky one because with Trading View, I know that you can't really switch the timeframes to. They're a little bit more difficult to switch the timeframes, but you can. You can't see two at once, though. You can't put two charts side by side and do the replay tool. There are other software that you can use that will allow you to do this, but I'm just for sake of what people do have access to that I don't know everyone has access to is Trading View. But you can switch between the two, and you're going to have to come up with strategies that are useful for the different time frames that you are trading on. And what I personally do is I use multiple time frames, and I suggest you do the same. How do you avoid blind spots? You just click through them, right? And you have to figure out which ones are useful to you. I suggest that a monthly candle is not very useful to you when you're trading on the 1 minute.
Fair enough. Yeah. So someone's asking if you have any hilarious yet profound pieces of advice on backtesting.
Hilarious and profound.
Yes.
That's weird. That's a weird thing.
I kind of understand why they're asking it though, because sometimes you do give kind of funny advice, but it does, it hits an emotional point with people sometimes. So it's okay. If you don't have anything, we just put you on the spot. It's fine.
Yeah, I don't think I'll have to answer every question.
And that's completely fair. Okay. So someone's got this one. Should we also practice forward testing and trading with live funds?
Yes.
To psychologically improve ourselves?
Yes. Yes, you definitely should. What I suggest you do is backtest. Get something that this is so guys, this is what's going to happen. I promise you. You're going to find something that works on the backtest, and then you're going to go ahead and live test it, and it's not going to work. And then you're going to go back and backtest again. And you're like, what the hell? Why didn't it work? And it's going to work when you backtest, and then you're going to live test it, and it's not going to work. It's crazy hilarious how this happens every single time. It's because you are only looking at when you're live testing, you're only looking at one trade. And that's all your emotion cares about. You only care about the thing that's happening immediately to you. But with backtesting, you can easily be like, okay, that one didn't work, delete. Okay, next. Oh, that one worked, sweet, got it. Okay, this one didn't work, delete, next, right? And you're not attached to it, but you're sitting there for an hour in pain. It's going to feel much worse, and you're going to mess up. So the reality of it is, if you're going to be live testing, you have to follow static rules. You can't be making decisions. And it's the exact same thing. You have to be able to place the trade, walk away. That's the only way it's going to work until you get to the point where you're doing this like 10 years down the line, and then you can start making decisions.
Mm-hmm. Of course, I just had one and it jumps up on me. Here we go. So, what are the most effective methods for simulating overnight risk or gap risk in back testing? Mm-hmm.
Interesting. The gap should show in backtest. So I'm confused. Personally, I'm not super experienced with backtesting on swing trading. I more backtest on day trading. The strategies you use should work on all time frames. There's no reason to believe that things won't work on all time frames. The reason being is because everything is automated now. All of the markets are basically run off of algo trading. So an algorithm is going to run on every single time frame. So there's no reason to believe that the 1 hour is going to be any different than the daily, right? The daily is just a little bit more accurate is all. So you could use any time frame and still find a profitable strategy, of course, over the period of swing trading. With gaps, you're going to be able to see them on different markets. I believe there's some on TradingView that don't show the gap, and then there's some that do. I can't remember which brokers show the gaps and which ones don't.
Okay. Does market news affect backtesting?
Yes. But again, data significance, right? And so what I would do is I would just shoot through it, and if you have like once in a while, you're going to accidentally run across some news and forget about it, and it's going to ruin a trade and you're going to fuck up. Make sure that you have risk management in place, right? But it's not going to be a significant difference. It might be 5% of your total trading that are affected by it, right?
Yeah. A bunch of people want you to show off your tattoo. They've been complimenting it, so they want to see your hand. As you keep it to yourself, you're like, no, you can't see it now. No. He's too self-conscious now, guys. Yeah.
I swear everyone's seen the tattoo already.
Yeah. I don't know. They want to see it. I'm not sure.
It's the mafia boss look with the suit jacket, Or the suit shirt.
Someone was asking if you use any visualization tools to make sense of your back testing results. Any particular graph or chart?
Oh. Yeah, the great thing about putting this into sheets is that you can start looking to see if if there are charts that are actually applicable. Something like a pie chart would be nice to show your win-loss rate, right? So you basically go into your back testing here and you say, okay, so for each one that's positive, for each one that's negative, you'd see in win losses, you'd be able to then categorize which ones made certain profits. And then you would say, okay, so anyone that made 1.5, that means it went to 2R, right? So if 90% of them went to 1.5, that's going to give you a really good indication that you might as well just take all of your profit at 2R, right? So that's actually a really, really good question. Because you can then look at, okay, so maybe it's really rare for things to happen like this, right? And so if it's super rare that things like that happen, then maybe I want to completely omit that from my trading strategy, right?
Mm-hmm. Yeah. I'm getting a ton of questions through. Guys, some of these we've already talked about and answered. So yeah. People keep asking about the emotional aspect, but if you guys are looking for help with the emotional side of your trading, we have a full psychology series that also covers that. So I'd advise starting there before asking Hunter specific questions about controlling emotions and emotional process.
There's a really good speaker coming next week that we're going to do a guided meditation with her once again. She is the psychology coach for Maven. So if you have any specific questions about that, she is an expert.
Yeah. Her name's Louise, and hopefully we'll get her on video this time. We had a bit of a technical issue last time. So other than that, I was being asked before specifically about if you use any sort of AI or automation and if you think it's beneficial to back testing at all.
No. The issue with that is, how do you know it's accurate with what you would be doing live? Right? If you want to make a bot that's going to be running off of the scenario that the AI and automation have created, go ahead. But if you are the one live trading, then you are the one backtesting. Right? Otherwise, you're backtesting with something that's not trading. It doesn't make sense. Like, what if I told Ryan to go backtest for me, and then he told me the data, and I was like, okay, I'll go live test now. It doesn't make sense, right? It's going to be inaccurate data.
Yeah. So this is a little less back testing related, but they were asking about how important community engagement is to your trading journey. Like, do you like to share a lot, or do you prefer a quiet cave of solitude?
Yeah, there's a big problem with influencers and posting their trades online and then getting flack for it, and making them bias. So it is better for your personal psyche and trading to be completely mute, right? Share your ideas and concepts and get feedback, but your individual trades you should not share. Otherwise, you're going to become biased. You're going to try to defend those ideas, and it's going to be harder for you to change your decisions if you do need to.
Yeah.
Okay, and also a little less back testing related, but do you have any pre-trading routine that helps you prepare mentally?
I put on side trance and then drink coffee.
You listen to a lot of music too, though, as well. Like
Yeah.
you're like he is a music guy, guys. If you're on Discord and you see him on Discord, you'll see he's constantly listening to music on Spotify.
I personally have studio quality speakers in my office just so that I can have really high quality loud music when I'm doing anything, right? And each song, like every style of music is for a different purpose. Trading, I listen to psytrance usually because it focuses you.
Yeah. This is interesting just because I haven't actually seen it before. Does age matter when it comes to being profitable and like the way you trade? Because you've been trading for several years now, right? So
it only matters in the sense that younger people are emotionally unstable. Right? Older people generally have figured things out more and have been first of all, they're able to sit longer in patience. Younger people have less time that they've experienced, so time feels longer, so it's harder to be patient. And the other thing is you're generally more likely to be more in tune and mindful of your emotions and be able to be present with, oh, I feel bad right now that the trade is in a loss and I'm not going to react to it, right? Younger people are much more emotionally reactive, which is a bad thing in trading.
Yeah. Would you agree, Ryan?
100%. Yeah. I think there's seasonality, being seasoned versus being green, and in a space like this that is so psychologically driven, definitely plays a big role. So I definitely agree 100% with everything Hunter just said.
My trading has gotten significantly better over the past few years without doing any more practice. I hadn't traded for a few years and I came back and I was significantly better.
Yeah. I think as you get older as well, you experience a lot more failures and a lot more wins, and it ends up impacting you less because you're like, well, I might fail this time, but I'll win another time. You're like, I've been through this before. This doesn't phase me the same way.
Great. Yeah. All right. If there's another good one that's egging you to go forward, let's do it. If not, let's wrap that up.
Sorry, I'm just looking through. This one might be a good one to wrap up backtesting specifically. What's the most important lesson you've learned from backtesting?
The data is everything. Data is like, even with running Maven, data is absolutely everything. And if you don't have a sheet, a spreadsheet that tells you what is going on, you are going to be emotionally unstable and frantic and not knowing what the hell to do. Okay. When you're at first starting, at least with anything, you need proof that what you're doing works. Otherwise, you're going to question yourself and you're going to talk down and you're going to make mistakes and then you're going to ruin it all anyways. Right. Right, guys, that is the show every single Tuesday, 4:30 p.m. UTC. That is 9:30 a.m. PST, noon 30 EST, where Ryan's at. Guys, if that time zone is not what I just said, you're going to have to calculate it for yourself. Next week, we're getting on a psychology coach, meditation, mindfulness, and a guided experience coming at you next week. That's Louis. How do I pronounce
Louise?
Louise. I always pronounce it wrong. And guys, Emma is going to pick a $50,000 giveaway winner right now. Emma, why don't you tell them how they're going to win?
Yeah. So I have a person queued up. I will be posting it in just a second in chat. When you see your name pop into our Discord, I'll provide the Discord link in chat and open up a ticket, and you can claim it through the ticket. I'll be letting the staff know that you're coming through to claim.
Great. Guys, show us some love in the chat. Give us one of those orange hearts, and we're going to wrap up the stream there. I'll see you guys next week. Thanks for watching.